All right, let's dive right in. We're about to break down a company that is absolutely essential to our modern world. But here's the thing. Most people have never, ever heard of it.
So let me just ask you, what is the most important company you've never heard of? It's a fantastic puzzle, right? Because it's not some flashy brand you see on TV. You definitely can't buy their stuff online, but I promise you, without them, the device you're watching this on right now just wouldn't exist.
And we're not talking about some small niche player here. Get this. This is a company with a market cap of over $570 billion. That is massive, bigger than so many companies you hear about every single day. So who are they, and how in the world did they get so powerful?
Okay, so here's our game plan for this explainer. We're going to solve this puzzle. First, we'll reveal what ASML actually is. Then, we'll dig into how it built an absolutely unbeatable competitive advantage, or moat. After that, we'll look at the big debate, the bulls versus the bears, and we'll wrap it all up with the analyst's final verdict on this quiet giant.
So, first things first, what on earth is ASML? Well, the short answer is they are quite literally the architects of our digital world. Now, they don't make the computer chips themselves. They make the one single indispensable machine that makes all advanced computer chips possible.
They do this using a process called lithography. Now, I know, lithography sounds super complicated, but this analogy makes it so simple. Just think of it as a photographic printer, but for computer chips. Instead of shooting ink onto paper, it uses incredibly focused light to print unimaginably tiny circuit patterns onto slices of silicon, building a chip layer by painstaking layer.
And this is where it gets just mind-bending. The scale we're talking about here is insane. This is not your printer at home. ASML's machines are printing patterns up to 30,000 times thinner than a single human hair. It's this level of precision that allows companies like TSMC, Samsung, and Intel to keep cramming more and more power onto every single chip, year after year.
And here's the real kicker. They are basically the only company on the planet that can do this on the cutting edge. I mean, look at this chart. Their market share in this space is a staggering 90%. It is a near total monopoly. Yeah, their old competitors, Nikon and Canon, are still around, but technologically, they were miles and miles behind.
So, the big question is, how did they become so dominant? Let's jump into our next section and look at how ASML built what might be one of the widest economic moats in the entire stock market.
Okay, so in the world of investing, a moat is just a company's ability to fend off competitors. And according to this Morningstar analysis, ASML's moat isn't just big, it's rated wide. That is the highest rating you can get. It basically means analysts are confident its advantages are solid for at least the next 20 years.
And this incredible moat really comes from three main things. First, their intangible assets. Decades of knowledge that no one else has. They are secret sauce. Second, massive switching costs. Once a company like TSMC builds a factory worth billions around ASML's machines, they are locked in. They're not going anywhere for 20 or 30 years. And finally, cost advantages. ASML spends over 4 billion euros a year on research and development. No competitor can even come close to that.
And this quote from an ASML executive just says it all. It perfectly captures that idea of intangible assets. The real magic isn't just in the blueprints. It's the years of experience, the trial and error, the deep relationships with their hundreds of suppliers. It's the kind of know-how that you just can't buy or copy.
And if the know-how wasn't enough, the physical challenge is just as huge. A single one of their most advanced machines, an EUV machine, weighs up to 200 metric tons. That's about the same as a blue whale. It takes over a year to put together and costs around 200 million euros. The barriers to entry for any potential competitor are just astronomical.
So, with a business that's this dominant, you'd think investing in it is a total no-brainer, right? Well, hold on. Not so fast. Let's dig into the great debate over ASML's future, laying out the case for the optimists, the bulls, versus the pessimists, the bears.
All right, let's break down this debate. On the left, you've got the bulls. They look at the AI revolution and see a massive, unstoppable wave of demand for the exact chips that only ASML's machines can help create. Their technological lead just seems unbeatable. But on the other side, the bears are worried. They point to geopolitics. What if there's a full ban on sales to China? That could threaten 15% of their revenue. The bulls say demand is so high they'd just sell those machines elsewhere, but the bears also point to history. The chip market is famously cyclical. It has huge booms followed by really painful busts. And finally, even though customers are locked in, ASML depends heavily on just 3 big ones: TSMC, Samsung, and Intel. That concentration is a risk all by itself.
So how does the analyst balance all these arguments? Let's get to the final take, which you could really sum up like this. It's a magnificent business, but it comes with a very, very lofty price tag.
And this is the absolute crucial point. There's almost no debate about the quality of ASML's business. It's incredible. The long-term outlook is, as the analyst puts it, magnificent. The real tension, the whole debate, is about whether the stock's price has already baked in all that good news and maybe even a little extra.
This slide just lays that tension out in black and white. The analyst's fair value estimate, which is basically their calculation of what the stock is truly worth, is about $1,400 a share. But as you can see, the stock was recently trading for over $1,481. That suggests that, right now, in the analyst's view, the stock is a little bit overvalued.
And what's really fascinating here is that this isn't a new situation for ASML. This chart shows the stock price versus that fair value estimate going back several years. All the orange sections are when the stock was trading above its fair value. The blue is when it was below. The big takeaway is that investors have often been willing to pay a premium for this incredible company. You can see just how much time the stock spends in that orange, overvalued territory.
And that really leaves us with the ultimate question for anyone looking at a company like ASML. When a company's business is this good, its technology is this dominant, and its future looks this magnificent, how much is too much to pay for it?